Market today for Thursday, November 7th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at DanRusso_CMT. Stock Market Today, brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email to get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities were little changed to slightly lower in Wednesday's trading, though the S&P 500 finished near the best levels of the day. Treasuries were stronger with some curve flattening. The dollar was lower versus the yen, stronger on the euro cross. Gold was up 60 basis points, and WTI crude was down 1.5% after rallying nearly 6% in the prior three sessions. And as we get to the desk this morning, S&P futures are up 40 basis points to start the day. Asian equities finished mostly higher overnight, and European equities are gaining as well. Treasuries are under pressure again after a brief rally yesterday. The dollar is stronger versus the yen, but lagging on the euro cross. Gold down 60 basis points, and WTI crude up 1.1% to start the day. And as we look at the structure of the S&P 500, I wish there was something new to say, but there really isn't. We're still continuing to pause above the breakout level. Key support continues to be around the 200-day moving average, which continues to trend higher. It's now at 28.95. And then below that, the August lows near 28.20. In the near term, we're still eyeing the 29.50 to 3,000 zone as near-term support. Should we get any kind of pullback here, that would be the key area that we would look to hold to keep the recent uptrend in place. Now, the RSI remains in bullish ranges and is approaching overbought levels. And as I said yesterday, I would actually welcome an overbought reading to lend a stronger momentum confirmation to the rally that we've seen in equities. And I'm kind of pointing out Chaikin money flow here because it's bullish and actually now spiking higher. So indicators are in line with the price strength that we've seen here. Just continue to stay the course, right? Look for bullish and very bullish stocks in leading areas of the market for potential entries, and mind your risk. We've mapped out the key levels for you. They haven't changed all that much. It's encouraging to see the 200-day moving average continuing to trend higher. Let's hit our market in a minute now. What are we writing about in the note today to Chaikin Analytics clients? Well, SPY closed near the highs during the quiet day of trading, near the highs of the day, that is. Breadth metrics continue to support the rally. We look at breadth every Thursday, and we'll take a look a little bit closer under the hood here today. It's interesting to me that equally weighted S&P 500s are also making a new high. Not interesting, but a divergence there would be a cause for concern, and we're not seeing it just yet. And also, it's not just the U.S. Global stocks are moving higher as well. We'll take a look at a measure of that a little bit later in the show. And as I said, futures point to a bullish open here today. Now, for the power bars, the Dow was relatively flat yesterday, 4 bulls to 8 bears there. S&P 500 also relatively flat, 120 to 90 bulls to bears. NASDAQ slight underperformer on the day, but still nearly 2 to 1 bulls to bears on the power bar ratio. And small caps were an underperformer, 680 bulls to 310 bears. And notice that small caps were an underperformer on a day where bonds rallied. So yields went lower. Remember the chart that we looked at yesterday showing the correlation between the yields and small caps. So as you would expect with the rally in bonds sending yields lower, small caps were an underperformer on the day. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. The major markets do remain mixed here as we throw the Dow in with a bearish power bar ratio. Let's look at our stock of the day now, Cigna Corp. Ticker symbol is CI, one of the healthcare services and providers industry group constituents. Closed at 183.13, up 70 basis points yesterday, so an outperformer. Power gauge rating for Cigna is very bullish due to very attractive financial metrics, very strong earnings performance, very strong price volume activity, as well as positive expert activity. So you can see the 4 main categories all skewed to the bullish side of the coin. The 20 factors rolled up give us our very bullish power gauge rating. So we have a very bullish stock that's in a strong trend above a rising long-term trend line and in a strong industry group. Healthcare providers are a strong group based on their power bar ratio. So the way I kind of see Cigna here is a bit of a personality change taking place. Remember, personality change is when a stock goes from being a steady underperformer to outperforming as the rating changes as well. And that is the case here with Cigna. Downtrend goes into a sideways action, and now starting to move higher. Couple different ways to play this one. For your breakout traders, I think a hold above the 180 level is your signal to be long Cigna. If you want to wait for an oversold condition within the context of this uptrend, I obviously can't argue with that either. The overbought, oversold indicator is kind of middle of the range right now. Ideally, what you'd love to see is a consolidation above the 180 mark, leading to an oversold condition to set up a better entry if you're a little bit more conservative. But as I said, if your process is to trade breaks above key resistance levels, well, you have one here in Cigna, so I can't argue with a long position in that stock. Take a look at CI, very bullish stock, now outperforming the market. Taking a look at our sector tracker now, the movement of the major sectors over the last 5 days, with the market kind of stalling out above the breakout level. Not a ton of change here with the sector movement over the last 5 days. As a matter of fact, this looks very similar to what we saw yesterday. Energy at the top of the list, as that group has been rallying with crude oil of late. Financials continuing to benefit really from two tailwinds. Number one, rising rates. Number two, the rotation that we're seeing towards value and away from growth. That's helping the financials. That growth to value shift also helping the industrials, which round out the top three sectors over the past 5 days. Technology continues to perform well also. Comms, materials, and discretionary are middle of the road. And as I said yesterday, not a ton of change here today. The defensive areas of the market underperforming. That's your staples. That's parts of healthcare, obviously utility and REITs. And utilities and REITs also get the added headwind of the rise in rates, and rates are moving higher here again today as equity futures move higher. Now, our industry in focus is actually one where Cigna is a member. Healthcare services, which over the past 6 months has underperformed the S&P 500 by about 2%, but the power bar ratio here is very strong. 19 bullish or very bullish stocks in healthcare services for only 6 bearish or very bearish stocks. So a greater than 3-to-1 ratio, currently ranked number 5 of the 21 subsectors that we look at, and it's moved up 3 slots over the past week. So some of the indicative names there, we touched on Cigna already with its very bullish rating. WellCare Group, also with a very bullish rating, and Select Medical, SEM, also with a very bullish Chaikin Power Gauge rating. So I think you could start to look to some of the very bullish and bullish stocks within this group, given the potential for it to continue to move higher. If you're looking at the ETF, we're not quite there yet. XHS is the ETF that tracks this group. It does have a neutral ETF power gauge rating. The trend is strong as it is above the trend line, the long-term trend line, which is beginning to move higher. If we drew a downtrend line here, you can see we've broken the downtrend line. What's interesting to me, though, is here's that underperformance, but look at the intensity of underperformance here. Stock goes from being an intense underperformer in the September-October timeframe to seeing the intensity of that underperformance begin to wane. Now, the fund is closer to overbought than it is to oversold. Chaikin money flow ticking back into bullish category. I think if you're looking at the ETF to kind of play the industries, this one's not there yet. I think the real value add here is to drill down to the stock level, right? Look at some of these stocks like Cigna, WellCare, and Select, as well as others with very bullish and bullish ratings for potential opportunities. The fund itself likely needs more time. Would love to see a breakout through this $68, $69 level. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Cody, COTY up over 13.5% following their earnings announcement, but it was really their commentary around margins that had investors excited, leading that stock higher on the day. DaVita, DVA, earnings send that stock higher by nearly 13%. Hewlett-Packard, I'm sure you saw the news that Xerox has approached Hewlett-Packard about a merger that sent Hewlett higher by 6.4%. CVS, they reported earnings, sent that stock higher by about 5.5%, call it 5.4%. And NVR announced a repurchase and also caught an upgrade. That was enough to send that stock higher by over 3.5%. Loser side of the board, Diamondback Energy, bang, the ticker symbol there, down 14% following their earnings announcement. SEE, 7.3% on the back of earnings. Perrigo earnings send that stock lower by 6.75%. Oxy, remember Oxy was on this list yesterday following their earnings report. Well, we saw some follow through to the downside yesterday. Stock lower by 5.5%. And BR, Broadridge Financial, BR, the ticker symbol, neutral rating there, 5.3% to the downside following their earnings announcement. Now let's look at it. It's Thursday. We look at Breath on Thursdays in our note, and Breath supports the rally in stocks, right? Taking a look at the percentage of stocks in the S&P 500 above their 200-day moving averages, respectively, 74%. So over 60% is what we look for here. That signals a healthy majority of stocks are above their 200-day moving averages, so above their long-term measure of trend. We really get concerned when this metric drops below 50. Has not been the case throughout pretty much the entirety of 2019 since regaining it early in the year, and just continuing to signal long-term breadth support for the market. On the intermediate term, same is true. 70% or roughly 70% of the stocks in the index trading above their respective 50-day moving averages. So the intermediate term trend from a breadth perspective looks good as well. Here we look for 30% as the key breakdown level. When we broke through that level late last year, that led to downside in the market. So far, we've held above that level. So from a trend perspective, both long-term and intermediate term, healthy majority of stocks are above their measures of trend. If we looked at the percentage of stocks above their 20-day moving average, the same can be said. Now, we do have some slight divergences here as the index is making highs and these metrics are making lower highs. I think that's largely a function of the rotation that's playing out in the market. As the former leaders begin to roll over and drop below their moving averages, there's a lag effect before the new leadership begins to really get above their longer term and intermediate term measures of trend. That's what I think is playing out here. Obviously, it's something we want to pay attention to, but divergences alone are not a reason to take action. They're a reason to take notice, right? And when we see the divergences, we sit up and take notice, but ultimately we defer to the price trend, and the price trend for the S&P 500 continues to be higher, supported by the advanced decline line, which continues to make new highs with the market, lending a breadth confirmation to the action that we're seeing there. Speaking of breadth confirmations, look at the equal weight S&P 500. Also near the highs, right? A lot of people like to talk that there's only a few names pulling the market higher. And while, yes, the larger cap names are leadership, the advanced decline line and this metric here, the equal weight S&P 500 trading near the highs, tell us that there is a healthy level of participation in the market. RSP is the ticker symbol here, trading above a rising 200-day moving average, similar breakout that we saw for the S&P 500. Notice momentum has shifted into bullish ranges, becoming close to overbought, lending a strong momentum confirmation to what we're seeing here. So yes, the large cap names are outperforming. You can see that here in the fact that RSP is in a downtrend relative to the S&P 500. But what we're interested here is in the breadth confirmation that this implies. If we started to see lower highs here in the RSP as the S&P 500 was making higher highs, that to me would be a signal of a breadth divergence. We're not seeing it yet. So the weight of the evidence from a breadth perspective continues to support the rally that we're seeing in equities. And finally, global stocks are joining the rally, right? So for a long time, it was the U.S. leading while global markets lagged. Look at pretty much the entirety of 2018. And as the U.S. market has rallied, global markets have rallied, and they are breaking through resistance in a move that's confirmed by momentum, right? So it's not just the U.S. Global markets rallying is a sign of healthy participation in the equity rally as an asset class around the globe. And what's interesting to me is that the ACWI ex-US ETF is breaking a downtrend line relative to the S&P 500. So potentially seeing some opportunities away from the US. To me, though, I'm looking at it as a sign of breadth for the equity market. That's going to wrap it for today. Have a great Thursday, everyone. I will be back here tomorrow.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Las Vegas, November 7th through 9th, over 75 of the most respected traders in the world, including Dennis Gartman, Tom Sosnoff, Todd Gordon, and Tom DeMark, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, options, forex, futures, cryptocurrencies, and more. Claim your free pass to join them at tradersexpo.com.